Well, good morning or good afternoon, depending on what part of the country you are calling in from. My name is Ginger Bell, and I would like to welcome you to the Finance of America Drawn, Balance, Commercial, and Fix and Flip Update webinar. And while you're getting logged on today, this has been a very popular webinar, and we're excited to have all of you on to talk about this brand new program and the updates that are happening. So I'm going to go through a couple of housekeeping items with you. First of all, you can listen a couple of different ways. You can either call in on your phone or you can listen on your computer. I do have everyone muted. We do have several hundred on this call, so I'm going to keep you muted. But if you do have questions, there's a couple of different ways that you can ask the questions. You can simply type them in to either the chat box that you see on your screen or the Q&A box. And so those are the two different ways. We're going to actually probably just go through the information today and save Q&As till the end, unless I'm seeing questions that are coming up in a particular area that you may need some clarification on, and Kelly can answer that. But otherwise, we're going to go through the information. There's a lot of great information to go through. Also want to tell you about a webinar we have coming up next week on Wednesday. I'll be working with William Brown, and we will be doing a webinar on how to conduct your own training workshop for realtors. And it sounds like Kelly's got logged on here, so we're going to be ready to go with her in a minute. We do have a handout, and you can access that in your chat box. I'm going to put that up there right now, and I'll put it up a couple of different times. You will be able to access that. I'm going to send a follow-up email tomorrow. It'll have a copy of this recording. So if you want to listen to it again or send it on to someone else in your office, you can do that. And then I'll also send a link to the PowerPoint presentation. So before we get started, I'm going to do a quick little sound check and make sure that you all can hear us. And Kelly, welcome. If you can say hello so I know that you're on. It looks like maybe you hopped off for a second there. She's there. Okay. Okay, so Kelly says we hear you fine. And if we can just have the rest of the audience, if a couple of you can type in there, let me know that you can hear us okay. And let me know what part of the country you're calling in from. I'm actually getting ready to head to Las Vegas for the NAM National Conference. Ohio, Trey, welcome. My son is in Tiffin, Ohio, going to school, so we love Ohio. And it looks like you can all hear me. And if you're planning on going to the NAM National Conference in Vegas this weekend, be sure to stop by the Finance of America booth and say hello. And we have some great sessions that are going on there, and Kelly and I will both be there. So make sure and stop by and say hello. And let me know if you're going to be there tomorrow. Just say, yep, we're going to be there. Okay, so you know how to ask questions. I put the slide deck up there. And now I'd like to introduce you to our presenter today. Kelly Rosso Soto has over 20 years of experience helping to build and renovate and flip residential homes. She's worked as a wholesale account executive, she's worked as a loan originator, and has worked hard for a long, long time to help originators grow and build their business. And in 2010, Kelly actually started flipping her own homes. And so her knowledge of flipping homes during, honestly, Kelly, one of the most difficult times in our industry, led her to become a field market specialist with Finance of America Commercial. And she helps originators build their business in residential and commercial lending. And I always love when I have an opportunity to work with Kelly, because the knowledge and passion that she has is absolutely phenomenal. So Kelly, thanks so much for putting this information together. I know you have a lot to cover today, and so we appreciate you and all that you do.
Hey, Bob. Hey, come here.
Hey, we're getting background sound from somebody, so I'm going to take a look at that. Kelly, are you there?
Okay.
Kelly, are you there?
Yes.
Okay, good. And I'm going to hand it over to you, and I want you to start off with, one of the things that's most important about commercial is really the power that it has. And I know you talk about that as far as the power of making money. So, tell us a little bit about what's happening in the commercial industry with what you're seeing.
So, with Finance of America, we have this division, the commercial division. We've been around about 2.5 years, and it's been extremely, extremely successful. We make it very easy the loan officers for you guys to be able to just really hand off a lead, because, and we will originate everything for you guys and get you paid. The line of credit is probably 90% of my business. I don't speak for all the other FMSs, but for me, it's about 98% of my business. And my relationships with my loan officers, they trust me enough that they hand over their leads. We talk to their borrowers on the phone, give their borrowers a level of comfort, and then my loan officers get paid on every deal they do for the next 12 months. So it's an extremely lucrative opportunity for you guys, and it works. The investors love the program because we are so aggressive between our leverage, our pricing, and our fees. There's really nobody out there that can really touch us.
Well, and really the ability to get into a market that you may not know a lot about is so important to be able to tap into that. And so, Kelly, I'm going to have you speak up just a little bit if you can, maybe bring your headset a little bit closer to you. So let's talk about some of the real estate investors. And so some of the features that is provided with Finance of America Commercial.
So with our product that we have, we call ourselves commercial. So let me just kind of get that out of the way first.
Right.
We call ourselves commercial because we loan into business entity structures, meaning LLCs and corporations. We don't loan against churches and tilt-up buildings, retail strip centers, businesses, things like that. We are able to call ourselves commercial because we underwrite to commercial guidelines and we loan into commercial entities only for non-owner occupied single families, condos, townhomes, 2 to 4 units, and 5 to 20 multifamily. So those are the only properties that we will loan against. We will do multifamily when it comes to fix and flip and ground up construction. But that is the only piece of mixed use multifamily that we will do that on. We also have rental programs, and I don't think I'm going into that too deeply here today.
Right.
But we do have a couple of rental programs as well. With the fix and flip and the new construction, the exposure limit / line of credit, we approve these guys for 12 months. You guys get paid for 12 months each deal that they do on this line. They fix it, they flip it, they can do multiple properties at one time. It's really geared so that these guys can grow their business quickly, because a lot of these people I speak to, they have, they're doing it with their own money. And I did it with my own money because I was too cheap to pay a hard money lender.
Right.
When
that's always been what's been in the past. Do you want to jump into the fix and flip, since that's some of the overview we're going to get into?
Yeah, let's do it.
Okay, cool. So starting with an overview, just talking about some of that exposure that you were just talking about.
Yeah, so the exposure limits, so we go up to 90% on the purchase and up to 100% of the rehab costs, or 75% of the after repair value, whichever's lower. And this is really big. You'll hear some people say, oh, I get 100% of the purchase price and I get 100% of the rehab costs and the ARV 65. But when you really get down to the nuts and bolts and you do the math, we're higher in our leverage. Our rates, we lead the industry at a 6.75. We have just enhanced our product. We've added drawn balance as an option. It's a loan level price adjustment for people that have experience in the fix and flip market. People that are doing ground up construction, we will allow everybody, people who have no experience, to actually do balance drawn. So that is a huge caveat to the new changes for the fix and flip. We are also able to extend it to an 18-month term, and that is also a loan level price adjustment. This right here, what you're looking at, this is kind of the overhead matrix. This is an old slide deck because we just did enhance our programs. So we don't have the new updated deck. I will go through what the changes are on here. So the exposure limits are the same. Individual loan sizes are 50 to 2 million. Same line amount, except line amount limits is 500,000 to 10 million. The interest does accrue on full balance funded or on balance drawn. So that's a big deal. That just changed for us. Again, it's a loan level pricing adjustment for that. And full balance means they're paying on acquisition and rehab. Balance drawn means they're paying on the acquisition and they don't pay on the funds for the balance that they're drawing for the rehab costs until they actually draw them. So it's a huge savings to a borrower. I just did one with a client earlier and it legitimately saved the guy $1,039 a month.
Wow.
In payment. Loan to value max leverage is 75% of that after repair value, up to 90% on the acquisition, and up to 100% on that rehab budget. When they're doing fix and flip and ground up construction, they can do it as an individual or within an entity structure, meaning an LLC or a corporation. If they take title as an individual, max leverage is going to be $1 million, no matter how much liquidity or experience they have. Again, the property types that are that we finance are single families, condos, townhomes, 2 to 4 units, 5 to 20, and multifamily and mixed use. If everybody's doing multifamily and mixed use, they have to have prior experience. We won't let them practice with us. So 90 days worth of interest, that never ever usually comes into play. And minimum credit score is a 620. So no experience, a 620 credit score, and we will help you get started in the fix and flip business.
How about manufactured homes, Kelly?
We don't allow manufactured. We only will allow modular homes. Modular is a little bit different because the actual unit has to be set on the foundation before we will release the funds. So, there's a caveat there. A lot of the manufacturer or modular manufacturers are learning about us and know how we work, and so they are allowing it. I'm doing one right now actually in New Jersey. So it's just getting us on the phone with the manufacturer and explaining to them how exactly it works, and usually they are okay with it.
So let's talk about as far as the 4 levels, starting with experience, going into liquidity, credit score, and net worth, which you covered a bit of these, but it's always good to have an overview.
Yep, experience. Whenever anyone calls any of the field market specialists, we always ask them FICO, liquidity, net worth, and experience. Experience is how many flips have you done in the last 5 years? So we go back 60 months. So it would be September 11th, 2014 to current. How many properties have you flipped? How many properties have you spec built? And how many properties have you purchased and you're holding on to as rentals? And then we ask about liquidity, and liquidity is just that. It's cash, money in your bank accounts, both business and personal. We will accept a Roth IRA, no other type of retirement unless you withdraw and deposit it into your bank account. And then we will accept stocks and bonds 100%. And then we look at credit score. So we take the highest mid credit score of all borrowers. So if I have a 620 and Ginger has a 740, we're going with Ginger, which is definitely different from the conventional side. And then net worth, we'll only really ask you about net worth if they want and they qualify for over a $4 million exposure limit. Otherwise, net worth doesn't even come into play.
Very good. I know you have some calculations in here, which we put in just for the purpose of going through on the slide deck. So you can go through these on the slide deck just to get an idea on how that works. But I know we're not going to go through these as far as line item by line item, but you can go through it and it'll give you an idea as far as, what you can do for calculations on it. And so let's talk about some of the FAQs. And we have a couple of questions I do want to talk before we move on to the next program. So I'll let you go through the FAQs first, Kelly, and then I'll get to the questions.
The rates that are offered, so Finance of America Commercial, we start at 6.75, but that is for a very well-qualified investor with a lot of experience and liquidity. And what I mean by a lot is 25 plus in the last 5 years between specs, fix and flip, and buy and hold. And also I think it ends up being about $1.2 million in liquid cash. We'll get you 6.75. The terms for the exposure limit, it's good for 12 months. Each deal is good for 12 months or 18 months. It doesn't show that on here, but that is one of the new highlights. So 18 months is a 50 basis point add-on to the rate, but it's much cheaper than paying a point for a 3-month extension twice. So definitely is a great thing. Once the borrower is coming up for renewal, then we will just refresh his line of credit and approve him for another 12 months. The only reason that somebody would not get approved, I just want to touch on this because I get asked this a lot, is if they either don't have, either they've had a bankruptcy, short sale, foreclosure, mortgage lates in the last 24 months, or they've had a felony that was a really severe felony. If they have had a felony, just let your FMS know, and they can see if that's something that we can overlook. That is the only reason they would not get an exposure limit with us. Property type, single family, again, condo, townhome, 2 to 4, 5 to 20 multi-units and mixed use. The loan to value and the loan to cost, it works hand in hand. Really, we're looking at their experience is really what's going to drive what that leverage is going to be. We do need access to the interior for an appraisal and inspection. If we can't get in because the tenant is being difficult, then we will fund 10% less on that acquisition. And once we get in and complete the appraisal and inspection, we will refund the borrower that after closing. The advantages for applying for an exposure limit, the exposure limit versus doing a one-off, with a hard money lender, we're not pulling your credit multiple times. That's number one. We do it one time. And then they have that liquidity there so that these guys can buy multiple deals and do multiple properties at one time. This product was designed so that these guys can have the money to grow their business and grow it quickly so that they're not, stuck. Do we need a general contractor? No. So if you're doing fix and flip and you're just doing a regular standard fix and flip, you're not adding on to the footprint or, adding a second story, then you don't need a general contractor. So if you're handy and you can do it yourself, that's great. If you are adding on to the footprint, then you definitely will need a general contractor.
Very good.
When can I request an increase to my line or a change to my terms? So we can always increase your line of credit after 90 days. If you have more liquidity and experience, we can definitely increase the line. We just have to get the copies of the experience and updated bank statements. The terms of the line will not change. They are good for 12 months. The only thing that can change is the increase to the line. The origination points, they work, you get paid on every deal that you do for 12 months. So if you charge 1 point, then you get paid, and they've got a $3 million line and they do a $500,000 deal today, and $1 million deal on Friday, and a $500,000 deal on Monday. You get paid on each one of those transactions. And as they flip those houses and free up that line for more cash, they can continue to keep using it and you continue to keep getting paid. We process all the loans, so everybody's really clear on that. You can help us get the initial documentation, but we take it from there. We handle all of it for you, so you don't even have to worry about that. So it's a $750 app fee. It's non-refundable. So that is for the attorneys to review the entity structure, the underwriters, and the processors. And it's just definitely non-refundable. I was going to say something about fraud because I've had some fraudulent bank statements come through, but if they get caught with fraud and we don't even go through with the application, they're still losing their $750 app fee.
Right. So real quick, what's the difference between loan size and exposure limit?
So the loan size is the amount of the loan that we will actually allow the borrower to do. So, and the exposure limit is the amount of the line. So the minimum exposure limit is 500,000. The max is 10 million. The minimum loan amount that we will fund is 50,000, all the way up to 2 million. So it really, they're two completely different things.
Very good. Okay, so let's move on to new construction. I know you have a little overview here.
Yep. So new construction works the exact same way. Once you're approved for the line, you're already approved to do ground up construction. So you can do ground up construction if you have no experience. You are totally fine. We will allow it. Your leverage will just be lower to start on that first property, and then we'll raise your leverage once you complete and sell that first deal. So again, rates stay the same, 6.75, whatever you're approved for the fix and flip, it carries over to the ground up construction. The difference is that we fund on the land acquisition, 75% of the land value with permits, 60% without. up to 100% on the cost to build, including hard and soft costs, or 75% of the after repair value, whichever is lower. We do loan to foreign nationals and non-permanent residents, and that's both for fix and flip and for ground up construction. In regards to that, the leverage is lowered on that. So if you come across that, just let us know. The land, it needs to be fully entitled in a build ready condition, meaning shovel ready. We don't put in streets or infrastructure or off sites or anything like that. It has to be, curb and gutter needs to be there and ready to pull once they start construction. The only thing that's different on here than on the fix and flip is the loan amount size for the individual loan size. For ground up construction is 100,000 versus 50,000 for fix and flip. And we do allow draw and balance on this. So a lot of our builders, I personally deal with a lot of really large builders, and I'm talking large where they build anywhere between 200 and 400 properties a year. And they've been waiting for this to come out because paying on drawn balance is much more cost effective for these guys versus paying on 5 houses that they're building at the same time and then paying on $5 million on their line when they can just pay on the land and then pay as they go. They go in, they pour the slab, they frame it, they call for inspection. We release those funds and then they pay on that. So the drawn balance on this is a huge, huge, huge deal. So for those of you LOs out there that have builders that spec build, this is a great, great program for them to grasp onto. It's very difficult to get a ground up construction loan through a bank. It's really hard. They have to provide audited financials, several years of tax returns, all kinds of stuff. It's really hard, and we make it very, very simple for our people. So same property type, single families, condos, townhomes, 2 to 4, 5 to 20, and mixed use. Again, multifamily and mixed use, you have to have experience in that arena in order for us to allow you to do business with us on that. And this is, again, these are the calculations, but you'll get copies of these decks and you can go through those. Can I use this loan for land development or land purchase with no intent to build? No, we do not allow anybody to use this loan for just purchasing raw dirt. You have to submit with plans and specs and be ready to start building within 90 days. So definitely not for that. The term, again, 12 months or 18 months for larger projects, and that is on a loan level pricing adjustment. The property types, again, are single families, condos, townhomes, 2 to 4, 5 to 20, and mixed use. The properties, or the loan cannot be used to finance a subdivision, meaning, 20 lots at a time. We really are only set up today to do 5 lots at a time. Are there exceptions? Of course there's exceptions, but they have to have an awful lot of experience in order for us to get them an exception. So we are not set up to do subdivisions yet. That is coming probably sometime next year. We will be able to deal with builders that are doing that. Draws, so this is a really big asset to us. We don't have a cap number of draws, nor do we set a draw schedule for our people. If they try to go to a bank, they have a draw schedule that the bank gives to them. They tell them when they're going to get a draw, and it's usually 3 to 4, 1 in the front, 1 in the rear, 2 in the middle. We charge $145 a draw fee, and that covers the inspector and the wire fee. So when the borrowers are ready, they call for an inspection. It works the same exact way for fix and flip. They just get a hold of Granite. Granite gets out there within 24 to 48 hours. They sign it off, they let us know, and then we wire the funds within 5 to 7 days. So it's a very quick process.
Very good. So let's move on and talk about some rental property loans, and we'll start with an overview.
So our rental properties, we've also had some great changes with this, and this doesn't reflect what we've changed also. No personal incomes required, no tax returns, no W-2s, no pay stubs, no max property count. We will go up to 80% on a purchase, up to 75% on a cash out refi, and everything that we do is truly just a debt service coverage. So it's rents versus PITIA. So principal, interest, taxes, insurance, and association dues. We also have blanket loans for 7+ doors, and that's on our portfolio program.
Very good. So just a bit of an overview as far as some of the single rental versus the portfolio rental.
So the single rental is for single families, condominiums, townhomes, 2 to 4 units only. These are 30-year fixed with a 3-year hard prepay. It's a declining prepay, 3-2-1. There also is a 5-1 interest only option. You have to have a higher credit score. The things that changed on this is the credit score got dropped down to 620 in lieu of 660. And the credit score for portfolio went down to 600. So that is a big, big thing. Also, the cash flow coverage, we went up to 95% in certain buckets for the single rental loan. Our rates have decreased. I mean, I've been doing a lot of single rentals since this happened, and this has been about 7 days now. And my rates that are coming back are anywhere between 5.25 and 5 7/8 on a 30-year fixed with no income. So I'm talking no tax returns, no W-2s, no pay stubs, none of it. We need 2 months, 2 months bank statements or proof of funds for 6 months reserves, and that's it. So as long as it cash flows, and if these guys want to do it within an LLC, we absolutely can help them out with that. On the portfolio, 7+ doors, 5 and 10-year term. It's amortized over 30 years. There's a balloon due at the end. It's got a matching prepay, a 5 or a 10-year. They have yield maintenance, and they also have the step down 5, 4, 3, 2, 1. It's amortized. It's different. I think it's 3, 3, 2, 2, 1 or something like that. Anyway, max leverage on that is 75%. Debt service coverage ratios, everything goes into our corporate office, and there's a real estate track sheet, like a portfolio rent roll that we have your borrowers complete. You guys send that to us, and then our corporate office, they actually figure out where it cash flows. These portfolio loans definitely take longer than a rental loan. So just so everybody's really clear on that, it could take 60 to 100 days, depending on how many properties are put under this one particular loan. The borrowing entity type can only be done in a single purpose LLC. No other, you can't do it in any other form. All property types, single families, condos, townhomes, 2 to 4, and 5 to 20 on the portfolio. We do not have a program for mixed use long term. So just so everybody knows that. And again, the FICO did go down to 600. Really quick, back to the single rental, we did just add short-term financing for refinancing. So Airbnb, VRBO, things like that. You need a 2-year history, 2-year track history, and you can consult your local reps, and they will get more into the weeds on that one. But that is another program enhancement that all of us have been waiting for.
Which is a whole nother topic as far as doing VRBOs and Airbnb. So I think we'll do a webinar on that. So I'm going to have you quickly go through some of the FAQs about rental loan products, and then we will tell you how you can do business with Finance of America.
So, you can do it in the name of an LLC for a single rental or an individual. On the portfolio, it must be done in the name of an LLC, single purpose only. We offer interest only on both programs. There's caveats to the portfolio, 7+ doors, 700,000 minimum loan amount. Everything else, there's other things on here that have changed. So we'll get you those correct numbers in an email. If you have a smaller portfolio, like 5 deals, that's fine. Just send it in, because we do make exceptions to do like, 5 doors, $500,000 loan amounts. As long as the cash flow is good, we can make those exceptions. And then again, for the types of properties that we do finance on the single rental loans, it's a single family condo, townhome, 2 to 4 units. On the portfolio, it's single families, condos, townhomes, 2 to 4 units, and 5 to 20. The max we will ever finance on multifamily is 20 units. We can't go over that right now.
Very good. So let's go through quickly how you can do business. And there's a couple of different ways that you can actually do business on commercial with Finance of America. So I'll let you cover those.
Yeah, so there's a couple ways. If you are a broker or a loan officer and you want to just refer your deals into us, we'll pay you 1 point. You just give us the name of your client and their phone number, and we will handle it. We will input them into the system under your name, and you will just get paid. on every deal that they do. Again, if you're a broker or an LO and you want to have your hands in it, which is not a problem, then you can go ahead and you can be with us every step of the way, and you can charge anywhere between, a quarter all the way up to, 2 points. And that'll be on each deal that they do, on the line, the exposure limit, and on the SLP portfolio. I have brokers on the lines of credit. I have one LO that he only charges his borrower a quarter because she does anywhere between 10 and 20 deals with us a month. So he makes, a lot of money off of her. So it's really up to you. It's kind of whatever your branch manager or your broker wants you to really charge.
And here's the map as far as the overview. And again, we're going to send this out so you can take a look at that as far as if there's licensing standards. And even if there are licensing standards in your state, then you can go for just brokering, which is a great option. And as you said at the beginning, Kelly, it's really what I think a lot of your customers do. So let's talk about some of the sales and marketing tools that we have available, because there's some really great things that FAM has made for you to be able to go out and really start marketing this product.
Yep. In the sales and marketing portals, we on our WLP, which is the FOA commercial website, where you can go in and you can actually see your loans. I input everything for my brokers, so I input it all under their name. They just log in and they can see all their people under their different single rentals portfolios and lines of credit. But in that portal to the left, there's a calculator that you can, price people out. There is all of the tools for, marketing yourselves. You can white label them. You can put everything, on there that you want for yourselves, and you can market and customize those for your selves, for your realtors and your builders.
Right. So next steps as far as getting started, super simple.
Yep. You're just going to want to reach out to your Finance of America account executive today, and you can request a branch webinar training. The field market specialist for the commercial division, we will go out. We will do, trainings for your office. We will do trainings for your realtor offices. Anything that you want from us, we will absolutely be there to help you. You can just talk to any one of us and get on our calendars, and we'll do webinars, we will do in-person trainings, we'll do conference calls with your borrowers and you. We'll do it all. So you don't have to be an expert to get started. Just truly trust in your FMS, your field market specialist, and we will absolutely make you guys money.
Right. And we have some additional resources that are available. So in the FAMU, which is the Finance of America Online University, first of all, we keep copies of all of the webinars that we've done. So if you don't have a login to access this, contact your account executive, get a login. We designed this, almost 3 years ago, and there's an incredible amount of information there just in terms of finding out. So if you want to get into watching another recording, we've been doing several recordings on commercials, so you can hop on there. And then the other thing is there's some marketing flyers in there that you can go and grab and actually throw your logo in, throw your information in, and take that and use that out in the field. So a great resource there. So we have a lot of questions, and I'm going to try and weed through them as we get started. So Kelly, I'm just going to tee them up to you. And if you think it's too much of a scenario question, just let them know, and then we'll go ahead and move on. Because, sometimes, and you guys have been great about asking questions, so please keep asking questions. I love seeing that. But sometimes it's more of a scenario, so you actually need to have a conversation with someone. But this one, I think probably a lot of people want to know, if someone wants to buy a foreclosure property that's from auction, and they have a limited number of days to close the loan, how many days does it take for you to close a fix and flip loan typically?
So if you're doing it out here on the West Coast, you got to have cash in hand. I think you've got like 24 or 48 hours now they give you. So we can't close that fast. It takes us about 21 business days to close a deal because we have to do our due diligence. We are not a hard money lender. We're in between Freddie, Fannie, and hard money. So we have people that we have to answer to. So we have to order the appraisal and the inspection, and that takes sometimes, well, in today's market, it takes about 7 to 10 days because everybody's so busy. But I would say 21 days. That's what I quote all of my brokers, and that's a safe, pretty much a safe bet. What we're doing is just the due diligence on the actual property, ordering escrow, title, and insurance, and getting that appraisal in. So I would say about 21 days. If you're doing anything back east, so I do a lot of stuff on the East Coast as well, and those are sheriff auctions. So those guys have a lot longer to get their deals closed. So if you're doing a sheriff auction, it's not an issue. But if you're out here on the West Coast and you're doing really a quick one where, you know, you're going to the auctions, we can't close in that short of amount of time.
Okay, and so this is on the interest and the monthly payment. So regarding the 6.75 interest and monthly payment, question is the monthly payment that the borrower pays during the 12 months as the property is being rehabbed is on, the interest is only on the monthly payments. Is that correct?
Yeah, you're paying interest only on the funds, on the amount of funds that we fund out on that particular deal. So as an example, if you're buying a $100,000 acquisition and you're going to put 50 into it, and let's just say these guys get max leverage, so 90 on the purchase, 90 on the rehab, or 75 A or B, and let's say the value comes back at 200, 75% of 200 is 150. So we'll never loan more than the ARV of 150, but we'll loan the lesser of the two. So we would fund out 90,000 on that purchase, which is 90%, 90% on that rehab, which is 45,000. So the borrower is going to pay interest only payments on $135,000 to us monthly until they pay it off. So if they are done and they flip it in 90 days, then they're done paying us the interest.
Right. So question as far as compensation, do we, the mortgage broker originator, originate the loan, or does FAM originate it? And do we just get a referral fee?
You can do either or. So you can be in it every step of the way. For my people, I do it a lot differently. So I don't go back and tell your FMS or your AE, you know, that Kelly does it this way, so you have to do it this way. But I originate all of my lines of credit with my LOs. I just have them help me collect all the docs, and I do all the inputting, and I handle it all on my end. But that's just because I'm a control freak. And if anything goes wrong, I can blame myself. And
so the main thing is there's options. So, so next question, can we get an exception on the $2 million cap?
Yeah, there are exceptions that you can get on the 2 million. It just really depends. I don't think that they'll go over 2.5, 3 million. But the borrower has to be very strong in order for us to even give them that exception.
And can the new construction be a primary residence, not an investment property?
We don't do anything owner occupied. Occupancy is a big deal with us, and everything is non-owner.
Okay, so question, can an existing owner use this loan for an ADU?
So not an ADU on an owner occupied, but if they are adding an ADU to a property that they have just purchased and they're going to flip it or, you know, turn it into a rental, absolutely, we do allow ADUs.
Okay, and next question, when are you going to have the updated slide decks available that can be customized and co-branded? And how will you notify us?
We should be having those anytime now. Your local FMS, Field Market Specialist for FACO, will be able to get those to you guys as soon as they're available. We just don't, I can't give you a time frame because it's all in marketing's hands, and everything that just changed, it just changed within the last like 7 days. So I know
right. And we have some questions as far as licensing, which I'm not going to get into because it's so state specific. So you can contact your FAM account executive and find out which way is better for you. So in California, then there's a CFL license, and it's a little bit different in each state. So contact your FAM account executive and find out what that is. So we're wanting to know a little bit more about the qualifications for foreign nationals.
So for foreign nationals, it's the same qualifications. We look at all the same stuff. FICO liquidity and experience. If they don't have any experience, it's fine. We will allow it. If they don't have a credit score, then we're going to give them a 660. We're just going to decrease their leverage. So the max that they're going to get is 70% on the acquisition, 70% on the rehab, or 70% on the ARV, whichever is lower between. But there's no price adjustment or anything for them. Like we don't hit them in price or in origination or anything like that.
Perfect. We're having some questions as far as calculations and compensations, which I'm not going to ask here because, again, those are numbers that unless you can actually see it and go through the numbers, I think it's difficult to go through it just in answering. So if you do have any additional questions, please contact your Finance of America account executive. That's where you get started. So your FAM account executive is going to be able to guide you as far as where to get the information. I have an overview of some of the programs, but Kelly and those that are on her team are the ones that are really who you're going to build that relationship with. But not just Kelly. As I said, there's a whole team of field market specialists that are available as well. So you want to start with your FAM account executive, and then they can help you as far as determining what the licensing is on your state, how you're getting compensated, all of those kind of things that are so important. And I do want to make sure we stay at our time here. And so if you have any other questions, type them in quickly. Otherwise, while you're doing that, I'm going to talk about our webinar that is coming up, which is next Wednesday, September 18th. And it's Learn How to Conduct Your Own Training Workshop for Realtors. And guys, we actually have a slide deck we're going to give you that you can go out and use with realtors. I have some videos that we're making for you to use on social media. Our goal is to provide you with some tools to be able to really go out and build your business. And so I'm not seeing any other different questions in. For scenario questions, if you have typed those in, or licensing, please contact your Finance of America account executive and get those answered. I am recording this webinar. I will be posting it, and we'll send a follow-up link tomorrow. It'll come by email. I'll send a copy of the recording, and then I also will send a copy of the slide deck. And so, Kelly, I want to thank you so much for your expertise and for everyone that is on the call. And for those of you who are traveling to Las Vegas to be at NAM National, make sure and stop by the Finance of America booth and also the sessions. There's a couple of sessions going on. Bill Dallas, who's the president of Finance of America, will be speaking. And I know commercial, Kelly, you guys have a couple of sessions going on, so make sure and pop in and see those too.
Thanks, everybody.
Okay, great. Have a great week, guys. We'll see you next week.